A lot of investors I know have been running the exact same playbook for the last few years, and it pretty loudly blew up last week. You can check out the memes on my profile. But instead of adjusting their strategy, what I'm actually seeing is too many people running away from the market in fear, abandoning all the momentum that they had already. So let me show you how you can actually run towards it instead. For years, most of the investors I work with came in doing the same thing: lean on negative gearing, stretch on the borrowing capacity, hunt down the best capital growth asset they could afford. One lever, one outcome. And it worked pretty successfully for many, many years. It kept down your personal expenses for accounting. It made it really simple to manage. You didn't need an accounting degree to understand your structures. But it's just not enough anymore in 2026. When the changes dropped last week, I didn't just sit on the sidelines. I went out and spoke to my referral partners, the accountants, the financial planners, and the buyer's agents. These guys are the teams that I put around my clients and, to be fair, a lot of my family members. And the goal was simple. The brief was simple: to figure out where the real opportunities actually are now. And out of that, we created 2 clear pathways from those conversations. Path 1, you're impacted on borrowing capacity and the asset you originally wanted is out of reach. That market, it's still wide open. And I work closely with a couple of teams, but one in particular, 000 Property, and they are buying incredible land and helping people build crazy good properties. They're really strong with tax depreciation, which helps affordability after the first year, and negative gearing is still there doing its job. The locations they're picking have incredible growth fundamentals. Now, the return's going to match what we've seen in some other cycles. I'm not going to try and predict that. That's your call, not mine. But there are real assets, real opportunity, and a clear way into the investment market if you have borrowing capacity that is holding you back. Path 2, you want the premium asset and you're not willing to compromise. You want the inner city, capital city location. You want the 600 to 700 square meter block in a council that's growing. You want long-term redevelopment options, maybe just in 10 to 15 years to have it. And so what I'm seeing from accountants and planners now is a real shift towards structure. Pulling out equity from your existing home or properties, route it through the right entity, and run group servicing with a lender that genuinely understands company lending. You pick up tax benefits through the right structure, you preserve your personal borrowing capacity, and you walk in and buy the asset you actually wanted. It's not a strategy for everyone, but for the right investor, it's a different game entirely. These 2 paths attract completely different investors, different sophistication, different goals, different tax positions. The mistake that I see people making is chasing one rabbit before they've actually worked out which path actually suits them. And then 6 months in, realizing the other option was the right fit the whole time. So step 1 isn't picking the property. Step 1 is actually walking the right path. And Aussies, we love property. We always have. But more than ever, we actually need more housing. We need more landlords. We need more everyday Aussies stepping up to the plate to provide places for people to live. It's not the government's job anymore to become Australia's largest landlord. And let's be honest, they just can't afford to be that. Not anytime soon anyway, without, I guess, more tax, yay. But it falls to us everyday Aussies to actually step into that gap. And that's how we ease this housing crisis. That's how we give the next generation, Gen Z, my kids, yours, a real shot at owning a home one day. Buying, owning, investing in property isn't just about your portfolio. Done right, it builds generational wealth and it's part of the solution to one of the biggest issues this country is facing. So let's not run away from the market. Let's run at it with the right path underneath our feet.